Laybuy's Q4 FY22 results presentation. I'm joined today, as always, by our CFO, Katrina, and she'll come on screen when she presents her section of our presentation. So looking forward to answering your questions at the latter end of our presentation today. So we'll launch straight into it with the results from the quarter. So as you will note, we have had another very strong quarter with GMV up 26% to 203 million. And in the UK, that increase was 39% on the prior period. Our full year GMV comes in at just under 870 million, up a 47% on FY21. So very proud of this growth that continues to be relevant to the business at Laybuy. Our quarterly income up 23%, with ANZ GMV for the quarter coming in just at 10% up. And I'll explain some of these as we work further through the presentation. We continue to onboard active merchants at a great rate, 50% up on the prior period, with the UK contributing to that growth at 112%. And our active customers up 32% on the prior period in the UK and 23% overall. And we'll talk a little more to the quality of the book that we are looking to create as part of our overall business plan for the FY23. We have a positive operating cash flow, which is something that we're very pleased to announce at 6.3 million for Q4. And as we had announced to investors back on the 24th of March, we, like all others in the buy now, pay later sector, have been faced with increased fraud and credit defaults, and that has resulted in a negative NTM for the quarter of 0.5%. Not something that we wanted to see, but consistent, as I think you will all agree, with the sector generally. The pleasing thing that we are seeing is that March has recovered markedly, and our NTM for the month of March was actually 1.2%. So we have certainly on the right road to recovery there with the efforts of the team to curb the bad actors through fraud and credit. The app exclusives continues to grow our business in the UK. We now have over 400 retailers made available to our customers over there through app exclusives, and we continue to refine that model that will continue to contribute to profitability over the coming weeks and months. We have also appointed a Chief Risk Officer. He started with us just earlier this week, and will be out here in New Zealand for a couple of weeks starting next week to get alongside the team here and use his experience of 20 odd years in this risk management environment and bring those skills to Laybuy. And finally, just to round off the summary slide, we have appointed Nor Capital, an investment bank in the UK, to advise the board and our team on a strategic review that includes facilitating discussions with potential investors and partners. Just giving you a sense of GMV from a pictorial perspective, you can see that we are up 26% on prior period, with the Q3 boosted by that strong November-December period that we've talked to you about before, and Q4 really returning to match the prior quarter's trading levels. The active customers, you'll see that those active customers, while 23% up on the prior period with that curve flattening somewhat, that is as a result of a very clear strategy on our part to focus on retaining and attracting quality customers. This all feeds into our path to profitability and our desire to grow our business responsibly and sustainably by bringing really good quality paying customers to our platform. As I mentioned earlier, active merchants continues to travel in the right direction in both the Australasian market and, of course, our key growth driver, which is the UK. We're going to run through some regional updates. I'll pass you on to Katrina, who will take us through those. She'll then talk to the financial results, and I'll come back a little later talking about from a strategic direction. So I'll pass you over to Kat.
Thanks, Gary, and good afternoon, everybody, or good morning, depending on what side of the Tasman you're on. UK has seen continued momentum in the GMV growth delivered in Q4, up on the prior year by 39%. Whilst a step down on the Q3, which of course included Christmas, GMV for Q4 included the second strongest GMV month since we first started trading in the UK back in FY20. Active customer numbers, while still up quarter on quarter, we have seen a slowdown of the new customers to the platform in the UK. This has been deliberate, as Gary has already alluded to, as we look to slow down our growth to deliver better quality outcomes with more favourable contributions to the NTM line. The impact of fraud and credit losses eroded significant value, and we are looking to reverse that with a medium-term focus now on profitability. UK active merchants continue to increase across both direct and app-exclusive channels. Laybuy remains focused on the SME market, as well as offering a diverse range of merchants to our consumers through the app-exclusive marketing offering. We have seen a favourable improvement in our commission rate quarter on quarter. ANZ has seen a much softer start to the calendar year, with GMV of 69 million, being 10% growth year on year for the quarter. Christo, could you just fix that? ANZ is dominated by New Zealand, with Laybuy having a lesser focus on Australia. Retail across ANZ has seen the impact of rising interest rates and soaring fuel and food prices, with a real squeeze on consumers' discretionary spending. Existing Laybuy business in New Zealand has been impacted by stock levels and freight delays. Retailers have struggled to get inventory into New Zealand, and this, coupled with the reduced discretionary income, has seen a real softening in January and February. A number of the new merchants pushed integrations into calendar Q2 as their focus has been on stock as well as resource constraints due to COVID running through New Zealand. As a result, development teams have not had the capacity to do integrations. This has been the case for Swan Dry, Adore Beauty, and the Pears Group, and many more that we have in our pipeline. Therefore, new business has business. Pleasingly, though, we began to see improvements in GMV for the month of March, with just over 20% improvement on daily GMV levels since levels seen in January and February. We believe there is reasonable prospect now of that improvement being sustained from here. We have also been working to reduce our fraud and credit loss experience in Australia to drive a better quality book in that market. The measures put in place, similar to that in the UK, have seen a significant improvement in our fraud and credit loss experience, but we have also seen that we expect to see a short-term slowdown in new customer acquisition as a result. New merchants onboarded overall continue to rise, but as noted earlier, we have not been able to onboard some of the larger merchants that were in our pipeline. Majority of the new merchants onboarded have been from the SME sector and from inbound inquiry. Just on to the financial section, in terms of revenue, despite the impacts felt in the ANZ market, we have seen a strong revenue number for Q4 at 12.1 million. This was up on prior period by 23%, 8 million of which relates to the UK, or 66%, underscoring our enthusiasm for the opportunity ahead in that market. The full year revenue has come in at 47.16 million. Whilst this was less than initially anticipated, this still represents growth of 45% compared to FY21 and within the revised revenue guidance. Whilst GMV was down by 26% quarter on quarter, revenue was only down by 11%. This was partly due to the timing of revenue recognition to match when consumers repay, as well as improvements in our overall commission rates. Commission rates have improved from 2.85 seen in the December quarter to 3.35 for the March quarter. This is as a percentage of GMV. NTM, while still negative for the quarter, has returned to positive levels for the month of March, with the group delivering an NTM contribution of 1.2% for the month of March alone. We had hoped to see improvements in February in line with historical seasonal behaviour. However, that was delayed by the economic conditions impacting consumer spending in the short term with lower GMV growth. Credit losses have increased quarter on quarter from 4% to 4.9% as a function of lower GMV. However, in dollar terms, the impact is down quarter on quarter. However, as noted, March did return to positive levels with a significant drop in our default rates for the month of March. NTM was minus 0.5 for the quarter, but as I've already noted, the month of March has returned to positive NTM, including the UK. ANZ remained positive throughout the trading period. Management has good reason to believe that the momentum should now continue with the measures currently in place to improve our credit loss experience. Those of you who are familiar with Laybuy will be aware that we have two debt facilities to support the receivables growth globally. As at March, there was 24.2 million drawn on these two facilities of a total available of 86.5 million. So it's still remaining a significant capacity to support the receivables growth book of Laybuy globally. I will now hand back to Gary, who's going to cover off strategy and outlook.
Brilliant. Thanks very much, Kat. And I think you will all agree that we are showing those green shoots, if you like, of improvement for some of those things that we have battled with over the course of Q3. And we're now seeing the fruits of our labours showing through in those March numbers. We are continuing to deliver on our strategic plan that has remained unchanged over the last 2 years. That is quite clearly to increase our market share in already established markets. And that's all about our New Zealand base, where we continue to show good solidarity in that market, and we are looking further into the Australian market, all with a mind to ensuring that we have a quality book, that we grow responsibly and sustainably to continue our path to profitability. The growth in the UK remains one of the key drivers for Laybuy. The penetration in that market of buy now, pay later into e-commerce is only around 2%, and we see a long runway available to us. We have made a conscious decision to be very cautious around the quality of our book as we look to grow sustainably, because we're very mindful of the macroeconomic conditions that all companies and all economies are experiencing right now. And we certainly don't want to be irresponsible to our customers, nor do we want to be irresponsible to the shareholders in terms of how we grow our business. So growth is still there, unquestionably. It is all about a sustainable growth in a quality book that we're looking to create. The platform enhancements are continuing. We have seen some great new products rolled out to our customers, mainly on the merchant side, to be fair, in terms of improving the service we are offering to them, and of course rolling out improvements in our fraud and risk management tools to ensure the business performs as we need it to perform on that path to profitability. Let's go to the next slide, please, Christine. Many of you will have seen this slide before, but I think it's important to re-emphasise the fact that the UK market represents essentially double the size of the opportunity of the New Zealand and Australian markets combined. And also, interestingly, from the Global E-commerce Payment Method Study, buy now, pay later and digital wallets are the two payment methods predicted to continue to grow between now and 2024. And Laybuy is a very strong participant in both those sectors for growth, and we expect to participate in that as well. So, from an innovation perspective, our app exclusive project or product continues to support the UK growth, and that is the virtual card using MasterCard's EML technology. And we have added more than 400 merchants onto that app exclusive offer to our consumers since launching that last year. Our tap to pay in-store solution is an emerging opportunity and has doubled in the last 6 months. And our ad marketplace, which we expect to go live later this year, will dynamically serve relevant ads to our consumers and create another revenue stream for Laybuy to improve the yield for our business and to become a more personalised and targeted experience for our customers. So we've got some exciting things coming at us around our product innovation. And of course, the new merchants that we added, over 1,200 in Q4, include some of the most well-known names in the world, Virgin Atlantic to pick out just one, Ticketek, and of course Debenhams, which is an iconic retailer in the UK. Risk management, as you might expect, has been a key part of our business since the day we started. We have seen across the sector an increase in bad actor behaviour in all countries in which we operate, as of our competitors. And so we have implemented a range of tools and software to further evolve our fraud and credit risk mitigation profiles for both our business and to protect our retailers. And I guess, as always, there's a balance between preventing fraud and ensuring that we don't create unnecessary friction on our platform. And those are the things that our team is working on constantly. We use machine learning, as you might expect, to further combat that risk. And as I have alluded throughout this presentation, our focus is on growth with a quality customer that will represent a quality book. And those quality customers are on the consumer side, obviously from a credit funnel perspective, but also on the merchant side as we become very familiar with certain merchants or verticals that attract bad actors, and we have the ability to obviously filter that very quickly with merchants that are demonstrating a higher than preferred fraud rate or default rate as well. If we just go on to our next slide, we see our competitive advantages with some of the unique products we have. We have obviously Laybuy Boost, which not only lifts our ROI, but provides the consumer with the ability to make a larger first payment. We have our virtual card offerings around our tap to pay, which is our in-store offer, which is a seamless checkout for the consumer and the retailer. And as I have alluded, the app exclusives that provides access for our consumers to hundreds of those well-known brands in the UK. We maintain our third-party integrations with Experian and globally with Centrix here in New Zealand. And that combined with some of the fraud mitigation technologies we have brought on board and continue to evolve has led to the improvement in NTM and the fall in overall default rates through March that we continue to refine, and we have an expectation that those numbers will continue to improve as well. And finally, we are currency agnostic. So as we are growing our business in the UK, those retailers who ship into New Zealand or Australia can access the customer base we have here, and vice versa. Our retailers in New Zealand and Australia who can ship into the UK can access the customer base that we have up there. So all in all, we have maintained those competitive advantages and we're making the best use of them as we continue to grow. And finally, I'd just like to spend a little bit of time on our outlook. I think whenever you look forward, it's useful to reflect that we have exceeded 800 million in GMV, and our revenue for the financial year comes in at just over 47 million. But there's three things I'd really like to leave you with from this presentation. We are looking to accelerate our path to profitability, and that is through a focus on controlled growth, particularly in the UK. And that's control is around focus on a quality customer that will lead to that path to profitability. We are safeguarded from rising interest rates through our existing debt facilities. I don't think that's as well understood as it should be. We have a fixed interest rate facility in the UK, and that interest rate actually falls as our debtor ledger grows in the UK. So we have no exposure to rising interest rates there. And the way our book turns so regularly in the Australasian market, or indeed globally, but the way it affects our Australasian book is a 2% increase in the underlying interest rate. So, for example, from 2 to 4% translates into a 4 basis point increase in our costs. So we have no order of magnitude impact from rising interest rates on our cost base. Obviously, we are very mindful of the impact on our consumers, hence our drive to ensure that we grow our book sustainably, responsibly, with a view to creating that quality deal ledger. And finally, from a new opportunities perspective, as I have alluded, the new ad offering will create a further revenue stream for Laybuy that has zero risk attached to it, and that will increase our NTM. And as I have indicated, we have retained Nor Capital to work with us on our strategic review and facilitate discussions with potential investors and partners. So overall, a quarter that has delivered where we thought we would come in based on what we were seeing off the back of a very strong Q3. We are mindful of the macroeconomic issues that are facing the globe, and that leads us to ensure that we have a clear line of sight on our path to profitability while ensuring that growth is sustainable, responsible, and with a quality book. So thank you for your time. We look forward to answering questions for you. So we have two questions. The first from Ted. Excuse me, Ted, if I mispronounce your name, Skapansky. First question, and what is the level of cash holdings? If it is possible, how long will it fund operations for? We have in the 4C our cash holdings that were a total of CAT 16 million. And we do not see any near-term requirement for cash as a result of that. You also asked, Ted, you're looking for investors partners. Does this mean current shareholders can expect a significant dilution in the future? That will play out as we look to understand what the strategic review throws up, Ted, and you can ensure that we will be doing the best possible deal for all shareholders, as you will appreciate. Let's give it a few more minutes to see if there's any further questions that come through from participants. Question from Peter Withers. Do you have any insights into April NTM? I'll pass it over to Kat to comment on that.
Hi, Peter. Thanks for your question there. We're only a part way through the April month end, but results to date in terms of our collections, which is obviously the key driver of our NTM number at the moment, is still showing significant improvement on where we had been for the quarter as a whole, and certainly improved on March. So we are looking into a quarter which should be more favourable to what we've just reported.
Thanks, Kat. Ted asks a question. Any idea how your shares are priced versus other listed buy now, pay later players? Ted, I've scratched my head around that since we listed, to be perfectly honest with you. And I'm noticing that the whole market for buy now, pay later, as we're all painfully aware, has been under considerable pressure of recent times. That is part of the capital markets that we are all a part of. And whilst we can argue till we're blue in the face about the comparability of multiples, we just need to keep delivering to our strategic plan and letting our numbers show that we are growing and on a path to profitability that is not that long. I'll just give it another couple of minutes since we have 5 minutes before the 1:30 set aside. Nice comment, Ted. Thank you very much. Appreciate your good wishes. We're very focused on ensuring that we continue the improvements that we've seen over the course of March and as Kat alluded into April. So thank you very much. If there's no more questions, I'd like to pass on behalf of Kat and I, our appreciation for your participation today. Thank you for listening to us, and of course, thank you for your ongoing support. It is appreciated. Oh, one other question, sorry. From Francesco Lampronti, I hope I've pronounced that correctly. With Zip buying Sezzle, would other buy now pay later companies be bought or merge with other companies, and what is your view? Look, I've always thought that consolidation in our sector is probably inevitable over time. Part of what we are looking at obviously is what are those opportunities for our business, and we will continue to do that with a mind to ensuring we act in the best interests of all shareholders. Thanks very much, Peter, for your kind wishes. Appreciate it. Okay, look, I think we'll close up there. We have our investor site and we're more than happy to answer questions through that if you haven't got your question answered through the presentation today. Thank you again and have a good afternoon, Australians, and to the New Zealand folk, have a nice late afternoon, early evening. Bye for now.